What's up guys, welcome back to another video. In today's video, I'll be doing a full down analysis for next week's price action. So recently I've made my full down analysis on what I think is going to happen with price as we finally broken out the daily range and took out significant lows. As you can see, we finally broke out, we've been in this choppy range recently and it seems like we've broke out, taken down November lows as we did previously here and our continuation of that. So through this, I've determined, since we're manipulating down and sweeping lows, not just sweeping, we're taking and continuating, I've determined that we're in a market maker buy-side model. So for that, we must find an accumulation period right here as we spotted, our manipulation down, and significant reversals. So let's go into a blank chart where we can go through the whole process. Just a little summary of a market maker buy model. There is initial accumulation phase where market accumulates as seen right here in the 4-hour chart. Then market will proceed to manipulate down, taking out slows to generate liquidity, giving us then a smart money reversal like a sequential SMT or any sort of reversal like a turtle soup. And then continue price higher above the accumulation period, finishing the model. So on the 4-hour, we can clearly see our initial accumulation phase right here. So by doing this now, we've spotted, and by knowing after the few days that we've manipulated, taken down, we can assume that this is our initial accumulation phase. So we're going to use our standard deviation tool to mark the start of the downward trend and the body that fully closes the swing low. And then by doing this, we've also created a very nice market structure shift as we've taken out the low and fully closed below it. Now with our deviations, we can see very nice potential liquidity grabs and where price wants to keep moving. And if we look at our 4 deviation, it's at this August low, which is only like it's like 700 points away, 600 points away, which is quite doable for us to take this low out and could finish our sell side model, our buy side sell phase. So now we have this. We want to see what PDRAs our deviations lined up to and which were respected. So for those who don't know, 4 is the maximum expansion, 2 and 2.5 is reversal zones if not respected and disrespected, and 1 to 1.5 are our reaccumulation zones. So what do we look at right here? We see price respects between this 1 and 1.5 area. Why? Because we have a 4-hour fair value gap that price taps into. So now that we see price taps into our reaccumulation phase, we must assume that price wants to reaccumulate higher to keep gathering more liquidity to go down. So let's go into the 15-minute chart to mark a deviation off this. Right here is where we tap the fair value gap. And we're going to mark a standard deviation off the 5-minute on this, because 5 minutes give us more precise highs that are taken out. So we're going to take this low, this low into this high, and guess what? If we reset chart view, we can see that the deviation we just lined up would have top ticked you or got you around the high of this reaccumulation move. So look at this. We tap into 1.5 FVG. We respect the zone. We mark a deviation now. We've reached maximum expansion, so we can assume prices finish moving. And guess what we also have? We have an SMT with this 3 p.m. high as NQ takes it. And ES doesn't. ES fails to take it. So now we can safely assume that this reaccumulation phase is finished. Now we can mark another deviation off this high into this close right here, and we get similar amounts, meaning that price is really targeting this low. So knowing that within a market maker's buy side or any model, that in the initial phase, it's always the opposite of your purpose. So if it's a sell model, we're going to go up. There's always three parts where we want to reaccumulate. We have three phases. So this is our first reaccumulation phase, our first. Now we need a second and one last one to finish our low and give it a smart money reversal. So now we want to find the second reaccumulation phase and where this might be. Brilliantly enough, we have a Kraken correlation, a quarterly concept of a PSP, precision swing point, as here we have a bullish close, while in ES we have a bearish close. So we can see this is our possible reversal in the end of the second redistribution phase. And also it lines up with our 2.5 deviation model, which is again the reaccumulation phase. So now in the 15-minute chart, we mark out our 4-hour PSP, take a deviation on what takes the high right here, and let's see what these give us in the high time frame PD array. Let's go into 4-hour first. Our 2.5 and 2 gives us a very nice 4-hour 2.5 deviation that we may retrace into. And our maximum 4 deviation gives us this 4-hour FEG zone that was created and tapped into to give us this 600, 700 point move down. So this is not as high probability. However, this 2.5 is, because this has already been tapped into. So now we can see that price will want to trail up. We'll want to trail up back into here, create another SMT like we did here, or some sort of reversal off this high, assumably like this, as NQ is more bullish, and SMT up like this, and then continue carrying downwards into our 4-hour low, our 4 deviation low. There we hope to find a smart money reversal SMT to complete the initial sell phase of this model. Remember, buy side market maker must have a sell phase. So this is what we're in right now. This is like down here is this. A smart money reversal here will give us this move up and take it as lows. All right, so this is my full down analysis. Thank you guys for watching. I hope this helped.